We are live, guys. Oops, we are live. Welcome to the Solid Report. What a day in the market. I feel like we're going down, we're going up, we're going down, we're going. I don't even know where we're going anymore. It's kind of hard to tell at a certain point. But I mean, we're gonna go all over it, guys. Welcome everyone. Thank you for joining the live stream. We have a pretty decent show up. Nothing too crazy. I think a lot of you guys already saw the news and everything this morning, but I want to kind of recap it all for you all. Starting from the top, obviously we had a very cold CPI report, came in around 2.7%. It was expected to come in at 3.1%, which means significant disinflation year over year. The month over month was okay. I think it was around 2.2% month over month, but 2.7%. I would argue that probably the most important part about it, which is the reason why you're seeing the market up today. At least I think it's still up. I can't even tell anymore. Yeah, the market's still up today. It's still about 75 basis points because it was expected to come in hot and it didn't come in hot. We're going to get a little bit more into those details later on in the stream. We also had Micron reporting earnings yesterday. The stock is up around 11% today. Actually, I think it was up as much as like the 260s pre-market and when the market opened. It's been head faking left and right, but still up 12% on the day, along with a few other names I want to go over. And on top of that, we also had Trump do a little bit of an executive order signing today. Had a little bit of talk about ACA subsidiaries, which didn't really bode well for Oscar. I'm going to play that clip for you guys. And finally, we have Nike reporting earnings after close, which isn't really going to be so significant unless, of course, you are part of you own that stock and you're hoping for some upside. Maybe we'll see an inflection point. But let's dive right into it, guys. Let's take a look here at where the markets are at, of course, which is usually the first thing that we do. And I mean, it's pretty wild day in my opinion. We've had random swings, where we're so back, we're not so back. Like it's really hard to tell in these kind of markets, especially with this kind of volatility you're seeing. I mean, it certainly is not as bad as where things were yesterday with the Qs almost at $600 per share for that ETF. We're up about 1.5%. We were up almost as much as I think like above 2.2% on the day. But I would still argue up 1.5% in the day is still pretty good. The only thing that I would really look out for here, and maybe it might not be so important for you guys, but it does hold a little bit of relevance here when we're talking about the sentiment of the market as far as where the algos are going, is that we're still here below the 50-day moving average and below the 20-day moving average and below the 9 and 21 EMA. Yesterday, actually, no, we're below the I believe for me, this is the 50 EMA. So we're below most of the moving averages here. We have the 100-day moving average yesterday that we were heading toward, but then quickly reversed on that upon the report this morning. And then, of course, we have the 200-day all the way down here at 552. I don't imagine we're going to get there anytime soon. If we do get there, we still need a little bit of work to do on this chart. I mean, we're still below a lot of the major moving averages. I actually thought that today was a pretty bullish day and we were going to close above these moving averages, but we still have like about an hour to go. So really anything can happen. I mean, you've seen these random swings in the market. If you look at the SPY is looking a little bit better than the Qs right now. You're seeing a lot of retrieval from Amazon is up 2.5% today. Meta is over 2% today. Tesla was almost about to make a new all-time high today, but it did not quite make a new all-time high. We did have that new all-time high in Tesla the other day. I believe that was Tuesday. Like these days are just like left and right. But we did have that new closing all-time high in Tesla on Tuesday. We made a new all-time high yesterday, intraday, and then we, as you guys know, we sold off pretty much the whole day yesterday, which the market didn't really expect because we actually opened on the Qs looking really good yesterday, and then we faded the whole way. So at least hopefully today we don't get that fade toward the close. We still have an hour left to go. I'm not going to be streaming the close. I'm going to be streaming a good amount up until then. If the Qs do a little bit of recover here on the 50 EMA, then maybe we can get some good news toward the following days. But it's certainly looking a lot better than yesterday. Yesterday was pretty insane in terms of the market. We did get that Oracle news yesterday that Blue Owl pulled out its funding for some of its data centers. That was about $10 billion of funding that Blue Owl pulled out. And in my opinion, Blue Owl is probably nothing too crazy to cry about when it comes to Oracle. We did have Goldman Sachs. I believe it was Goldman Sachs that stepped in and will be providing that funding. So it's not like Oracle will not be able to pay the debt, but I think it puts a little bit of concern for a lot of the other data center stocks out there, which Chicken Noodle did ask about in terms of IRA and price action. I mean, I could tell you right now that the market isn't really a huge fan of the data center stocks when it comes to building out and scaling out a lot of resources. We have Nebius here near the lows of the week. We have TeraWolf here near the lows of the week. We have a bunch of other stocks. IREN is just been sliced in half, more than sliced in half from its all-time high. And, I would say that these continue to stay a little bit weak on the market. We had Hut 8, actually, they signed a deal with FluidStack and Anthropic yesterday, providing up to 2.3 gigawatts of capacity in the next few years. But we can see here that it's basically sold off the gains from this morning, but it's still up pretty decently from when they announced that news last Tuesday. But again, the price action isn't so favorable, of course, when you're trading below major moving averages over here. So that's the reason why I try to bring up these moving averages to you guys, because they do make a difference in the short term. And if you're trading the short term, you need to keep an eye on this stuff, especially when you're considering to add onto these positions significantly. And for me personally, I don't like to add onto positions when they're trading below major moving averages. So if I'm looking at this iron chart over here, if we recover this 100-day moving average and hopefully the 20-day and the 50-day moving averages, then maybe it might be something good to add to. And yes, okay, that's all the way up at $53, and I would miss this massive move that it would make over here. But again, we need to recover that bullish trend for me to add to positions, not so much in a downward trend, because we don't know how low this is going to go. There were a lot of people thinking that there's no way this can go to $30 when I was up here. And here we are today. So, never say never when it comes to the market. Even Nebius, when this was all the way up in $140, no one would have ever believed it was get to $75, and not even at that velocity. And here we are today. So be mindful of the market, be mindful of risk, and manage your portfolio like a professional. Don't degen into calls with full ports like some of the people out there. Otherwise, you will get slaughtered if we have a mere 3% pullback in the market. All right, so let's go ahead and take a look at the Micron earnings. Micron is over here today. Oh, where is my... Yeah, here it is. Micron is still above $250 today, but I would say that this is a crazy candle to be seeing printing on a day like today for Micron. Those earnings are pretty stellar, guys. Like I have to admit, I did not see that coming. I didn't see the beats across the board. I didn't see the guidance raises. I didn't see the commentary. And I was wholly expecting Micron actually to be either somewhat flat or down on the day, but it definitely was not. And Micron definitely saved the day. So very good news for the market. I think the market took that very positively yesterday after hours. And then, of course, we had Trump have his speech later on that night, basically pumping more money into the system by announcing, what was it, like $1,700 toward military members to be invested into the stock market. And then you had the CPI news coming this morning. All that good news was basically reversing all of the bad news that we got in the last few days. The question is it enough to bring the market back to all-time highs? And we need to see some work back done in indices. Still, Broadcom is still very far down from its all-time highs. Mind you, the all-time highs that it was at was very strong momentum. When that momentum dies, these stocks tend to die along with it. And I would say the whole sector, if you look at the semiconductors or SOX indices, this is still, this chart needs a little bit of work for things to come back here. All right, so that was a lot to unravel. I want to go over some of the Micron numbers here that one of our good follows, Consensus Guru, did provide. Opening this up right here. No, my bad. That is not the correct chart. I am pulling up the wrong Notion document. Here is the correct chart. All right, here we go. So Micron came in. Shout out to Consensus Gurus. They always produce these charts along with their Earnings Edge Substack that they do have, but they provide a lot of this stuff for free. So shout out to Consensus Gurus. And actually, Consensus Media is their new name, but they're still the Consensus Gurus handle. So anyways, We had them come in revenue. Revenue was actually expected to be $12.9 billion. They came in above that, beating expectations by 5%, and they grew 56% year over year. I think the real story that made the market gap up about 11 to 12% today was this gross margin over here, but not just the gross margin. It was the operating margin. Gross margin was expected to come in at 51.6%. It came in at 56.8%. That is a big beat in terms of expectation. You also had the operating margin from 41.6% expected to 47% actual. So let me just clarify that for you guys, or maybe make a little bit indication on why the stock is up 12%, is because they reported $13.6 billion last quarter. And for every dollar that was printed last quarter in terms of sales, 47 cents of that was actually operating profit versus the 41.6 cents. So if I bring up my calculator over here, if I have $13.643 billion times the expected 41.6, that would mean that they got $5.67 billion of operating income last quarter if they came in. But they did not come in line. They beat those expectations. So 643 times 0.47. So then that means for every single dollar that was printed, or for the $13.6 billion, they had $6.41 billion of operating income. That's almost $1 billion more than what the street expected, delivered straight into the operating income. That is very bullish, guys. That is very bullish for this company. And that is no wonder why the stock is up. Is it going to stay up? We'll see. Micron is actually trading near its all-time highs today. I don't believe it made a new. No, it did not make a new all-time high today. Maybe it did pre-market. Let me check out the pre-market. Actually, yeah. No, actually, it did not make a new all-time high pre-market. But I would say a lot of the easy money's been made in Micron. There was a point not too long ago, like literally just a few months ago, when I was pounding the table on Micron, and so were a lot of people. Steve Fiorio was pounding the table on Micro. There were more than a few people on Twitter that pounding the table on Micro. That valuation literally made no sense for the fact that you have the bill of materials, which is basically all the components that are used to build these semiconductors. Micron, not Micron specifically, but Micron, SK Hynix, and Samsung, the three major players when it comes to high bandwidth memory, is approximately 30 to 40% of the bill of materials and cost it is toward building these chips. This is a very significant company to be involved in a massively growing TAM for semiconductors. The stock was trading at $110. It didn't make any sense to me. The valuation that it had as part of that cycle at that time, there's a reason why the stock went in a massive double in just the last few months, because the market recognized how important it is. Finally, usually the market is kind of late to this stuff, but this time they recognized it very quickly. And that is the reason why it doubled. Coming into earnings yesterday, it had already doubled. So that means they would have to really beat those expected expectations or estimates. And they did. And that's the reason why the stock is up 11% today. So hopefully that holds, because I think there is a bit of significance for these gains to hold on a lot of the semiconductor stocks in order for the bull market to continue. As we're seeing right now, Micron is trading above all the moving averages. So this is very bullish for the stock in terms of the trend. But we need to maintain this trend in order to maintain the bullish trend in Micron, but also the bullish trend in stocks, but also the bullish trend in the S&P 500 and the Qs. As you're seeing right now, the Qs are fading quite a bit here. And we've had 2 or 3 instances today where we had a major drop in the stock market intraday. And usually when that happens, that is not small money of people selling stock. That is big money selling stock. And when you have these random moves occur throughout the day, and yes, it gets bought up random throughout the day, I don't think that's something that should be ignored. I think that's something to note mentally in your head, because usually this does not happen near the bottoms. This usually happens near the tops. Again, I'm not saying that we're at a top. I'm just saying that right now, the trend is not bullish for the S&P 500. Sorry, for the Qs, it's not bullish. It's still bullish for the S&P 500, which is probably the most important factor here, because we're trading above the above the 50-day moving average of the S&P 500. We are trading below the 9 and 21 EMAs. So we need to recover these. Yesterday looked terrible, right? But we recovered those, so hopefully we stay above those to maintain the bullish momentum on the stock market. So with that set aside, that is my analysis for Micron. That is my analysis for the S&P 500 in the market where it stands today. Let's jump into the CPI report. So we had some numbers coming out that was pretty interesting. But one of our good friends, Warren Pies, which I would really like to interview Warren Pies one time. He released this tweet this morning, which was very significant because I've been following Warren Pies for years, and he's been one of the few people that have been bullish all the way from the bottom and has been continuously saying, like, look, we are very bullish going into 2026, and they got just that. The reasoning for the bullish upside of the market and on top of the bullishness of commodities, specifically gold and silver, is because he did see inflation coming down over the long term, but he did see that it was going to be sticky for quite some time. And today we finally had that inflection point where maybe we're not so sticky anymore. And the three components that were very disinflating in this report that brought it down from 3.1% down to 2.7% was shelter, oil, and labor. We already know the story with oil, okay? Oil has basically dropped in half since 2022 and continues to trend downward, especially with the whole business happening in Venezuela, where they're going to be trying to get Venezuela to release all the barrels of oil. That is going to suppress the oil market much more than it is today. Will oil go down? Who knows? But it's very unlikely you're going to see that massive uptick in energy, which would bring CPI up if we don't get more oil on the market. So we'll continue to see what's going to happen with that one. But obviously, shelter, the housing market is not collapsing per se, but the higher rates is causing the housing market to become somewhat stagnant and cold. The last two expected big seasons in the housing market, which is usually during the summer when everyone's moving. We're in between the school year. Parents want to move and everything, so that way kids don't get interrupted with school. Usually things are kind of dead around that time. That's usually when people buy a lot of homes. And we did not see that for the last couple of years. So therefore, prices for houses come down because the demand comes down. And on top of that, the supply is coming down as well because it's not as much demand. If you look on like Redfin or anything like that, you could see houses are listed for like 2 months, 2 months, 3 months, and those prices are being slashed. It really depends on where you are. I mean, I live in Los Angeles, so houses, good deals don't usually stay on there for too long. There's a lot of house flipping and everything, but then there are houses in like Des Moines, Idaho, or Ohio. I apologize, Des Moines something, but like the place where everyone moved to right after we got those 0% interest rates. Everyone moved out to these areas because housing was extremely cheap and you can get like a bigger house for a lot cheaper and everything. And then now people were kind of stuck there because maybe they didn't want to live there anymore. Maybe they wanted to move and so on, but they couldn't sell their house anymore because there was no more demand in the market. But now you've continuously seen that year over year, that shelter is continuing to decrease, or the cost of real estate is starting to decrease slowly over time because rates are too high. No one wants to spend $6,000 on a mortgage for a house that's just mediocre. So that's the problem that you're kind of seeing yourself. And that's what Warren Pies has been pointing out for quite some time. And that's continued to put the pressure downward on inflation. And lastly, labor. Labor, of course, we saw the unemployment tick up the other day to 4.7%. And that continues to show that, look, there's not that much hiring happening in the market, and this is directly impacting inflation, right? So these three factors is what's bringing down inflation. Now, where is inflation going to go from here? Well, if you look at this from even a technical analysis perspective, would you buy this chart? I wouldn't buy this chart right now. You have this massive trend line right here, and you have the price going below it, but he's specifically pointing to CPI rents and then San Francisco rents breaking more disinflation ahead, which he is seeing disinflation. Now, disinflation is not inflation, okay? But before we continue on with the segment, I want to give a shout out to Wolf Financial on X. Go ahead and follow Wolf Financial X, which is likely where you're watching this stream if you're on X. But if you are on X, Twitter, X, I don't know, whatever it's called nowadays. I feel like some people call it Twitter. I call it Twitter sometimes. But if you are on X, go to our YouTube channel. You can go ahead and communicate with me and you can ask me questions, whatever it is. And I'm answering questions in real time, guys. If you shoot a question over there in the chat, I'm going to pick up on it and I'm going to see it and I'm going to answer it to my best ability. But go ahead and check that out in there. Wolf, we have tons of additional content available to you guys that we are just firing this content out all the time, every day. Shout out to the Wolf crew. Shout out to Gav. Shout out to Evan, Cade, everyone, all the entire Wolf crew. We are just bringing out additional content. We also have Wolf Trading as well with Jordan and Emp. We also have Wolf in the EU. with Eva, and she usually does those on Tuesdays and Thursday mornings. I believe it's around 5:30. No, actually, it's like 4 o'clock my time, so that'll be around 7 a.m., 7:30 a.m. Eastern time. So go ahead and check that out. Tons of content, guys. Bring you tons of content every single day. So now back to the story here with CPI. We're continuing to have disinflation. Disinflation is not deflation. Deflation is when inflation is actually a negative reading, not a decreasing reading. A decreasing reading going from 2.7 or 3.1 down to 2.7 is disinflation, meaning inflation is slowing down, which is generally good for the economy, right? That means prices are getting cheaper. And if prices get cheaper, people buy more. They usually do. People usually buy more. I mean, like, if I go to Target or something and, you tell me that coffee creamer is 2 for $5, I'm going to be like, well, then I might as well buy two. If I was going to buy one for $5, I might as well just buy two, right? Maybe a bad example, but I drink a lot of coffee. So whatever. But if prices are usually cheaper, people tend to buy more, and that means people tend to consume more, and that would directly contribute to the consumer price index, which is what CPI is. All right. So definitely good news for the Fed. And in fact, if we have the CME Fed funds futures, we have the probability of a rate cut for the January meeting, which is originally at 24% yesterday, up to 26, 27%. The Fed only forecasted cutting rates about 2 times next year. Actually, let's go ahead and take a look at the December rate cut probability. Yeah, about two cuts next year. So if the market slides more toward getting more rate cuts in, then that would generally mean that it's overall bullish for the market, because lower interest rates means that they can finance debt at a much cheaper rate. And even like a 10, 20 basis points drop in terms of how much they can finance that debt could possibly mean tens or hundreds of billions of dollars as a sum for all these companies, which is just going to be directly contributed toward building more products, selling more products, and so on, and ultimately into GDP. And that's the reason why we need lower inflation to get that 20% GDP in the market, as Donald J. Trump would say, President Donald J. Trump. So that would be the story with that. And that's the reason why we want inflation to be lower if we want the bullish market to continue. All right. So let's hit up the audience right now, guys. Was the CPI data good? Well, I mean, I don't really need to answer that question for you. Was the CPI data good? It looks like the CPI data was good. The market's still up about 1.5%, looking a lot better than it did a second. This is a craziness with this market. Like literally, the market was it was just so much lower like 5 minutes ago when I looked at this thing. And then now it's like, man, this market is just wild right now. Like, I don't know, I still remember, and don't call me a millennial or a youngling, whatever it's called. But I still remember buying stocks in like the 2010s, and yeah, things were a bit choppy, especially during 2016 with Volmageddon and like 2018. Like generally speaking, I feel like so many new things happen every single day, and the volatility of the market has just been very wild. Like if I look back in this chart, actually, in light of things here, there really is nothing to worry about. Like, you don't really need to pay attention to any of this noise if you're investing for like 30, 40 years, right? I'm clearly here for entertainment, and I'm clearly here to tell you guys what I'm doing, not financial advice. And shout out to the 11 people on the Wolf Financial channel, the 29 people on my channel. If you're on my channel, I'm going to be broadcasting and streaming these shows exclusively on the Wolf Financial YouTube. That's youtube.com/@wolf_financial. And that's where you're going to be seeing me 4 days a week, Monday through Thursday, hopefully at the same time every day, but surrounded by really good events and important events that are happening. And also a lot of collaborations with the crew and also with the Wolf crew as well. But anyways, in the scheme of things, guys, like the market is just bullish, right? We're in a bull market. All right. Like if I look at this monthly chart over here, does this look like something you want to sell? I don't want to sell this, right? But if I'm thinking about short-term plays and producing alpha in the market, which stock picking in the market is a very hard thing to do. I mean, given like Amazon, even year to date, Amazon is not green year to date. Like I don't know what the market's problem is, but they really don't want Amazon to be green year to date. Like every single time it tries to get over in positive territory for the year to date chart. Oh, look at that. Actually, it's green year to date by like 2%. Not bad, not bad, not bad. I mean, that's good. That's good. But the market is up significantly higher year to date. The market is up about 14% year to date. The Qs are up about 18% year to date. But in the grand scheme of things, guys, in the last 5 years, the Qs are up 100%. SPY is up 100%. Even Amazon is up. That was a terrible setup. Amazon is only up 43%. Why does it feel like, oh, that's because I was buying Amazon when I was down here? And that's when a lot of you guys are buying Amazon too. But hey, a lot of you guys are buying Amazon way back here and you're up 186,000%. In the grand scheme of things, buy stocks and hold them, right? Just buy stocks and hold them. Sign off. You don't need to watch any of this stuff anymore. You don't need to log into Twitter, whatever. But man, this stuff is just enjoying to watch. It is just entertaining to watch this stuff. It's entertaining to watch the news. It's entertaining to see what impacts the market. And making money is also entertaining as well, especially when you're making money in a short period of time. So thank you all for tuning in. All 49 of you. Man, we got 41 people on my channel. Hell yeah. Hell yeah. Let's go. Let's go. All right, guys. So last thing I wanted to talk about, we're probably going to tune into some other things over here as well, because we're about 30 minutes into this segment. We got about 50 people here. So we're going to go on to the next one. What is up, June? Thank you very much for coming. Let's talk about ACA subsidiaries. Now, I know a lot of people, hold on. I know a lot of people are very bullish Oscar, right? But I kid you not, when it comes to ACA subsidiaries, the fundamentals of Oscar do not matter in the short term, right? And the reason why I say this is because you have a company that is profitable, that is heading toward profitability. I believe they just printed their first profitable quarter or something like that recently. You have a company that's going to strive very well in the long term. But every single time you get bad news about ACA subsidiaries, Oscar goes down, like you're basically seeing today, right? The market hates the news that, not really news, but the market doesn't like what Trump was saying as far as the ACA subsidiaries. Oscar's down 3.7% today, while the market is up 1.5% for the Qs and about 1% for the SP 500. And I mean, it just cares about this stuff in the short term, which is pretty ridiculous because in the long term, it doesn't really matter. But this is just the market of how it works. The market does not look 2-3 years in advance. It literally looks no more than the next few weeks. In fact, I would even argue the way the market is today, it doesn't even look further than the next 24 hours. Like it sees this CPI report and it just like, oh, we're good. It's like, guys, did anything really change? I mean, yeah, we had a print in the CPI report that was pretty cold, actually very cold, right? But like we knew we were heading down in inflation anyway. So why didn't you just rip the sucker up S&P 10,000? Why? Because the market only looks literally in the next 24 hours. Like that's just what it does and forgets everything that happened. That makes it very beneficial for people who want to own stocks, who want to own a company that's actually at a pretty decent valuation if you're willing to hold it for a long period of time and ignore all the noise, right? But unfortunately, the noise is freaking loud. The noise is very loud when it comes to Oscar. And the noise you're hearing with Oscar is coming from the government. Now, I got nothing political to say, right? It's like I'm not going to like provide any political output. In fact, I'm mostly neutral whenever it comes to politics because I just want the stock market to go up, right? Stock market goes up, we all make money and so on. That's great. Like, if President Trump wants to say things to make the market go up, I'm all for it. If Biden wants to say stuff that makes the market go up, I'm all for it. Like, to me, it just doesn't matter as long as it impacts the stock market in a good way. Of course, there's things beyond that, but I'm not here to tell you guys about that. I'm here to talk about the stock market. And what we heard from Trump today was not good for Oscar. So I'm going to go ahead and play this clip for you guys. I apologize. There was no sound. Let me replay that one again. Thank you. Thank you. All right, here it is with sound.
Mr. President, is there anything you can do now, Mr. President?
Can I answer this? This is going to be
right now, as far as I'm concerned. Go ahead.
We just got data today. We have federal exchanges where people come shopping for the ACA. And the president hasn't heard this yet, but we've talked to the team. The percentage change from last year was down 2.7 to 2.8%. Not the massive numbers that have been predicted. And there's many possible reasons for this, but right now Americans are signing up for these programs despite all the things that have been going on. 2.8% is a tiny fraction of what many had claimed would happen, and I think it speaks to the fact the American people appreciate these ACA plans are already subsidized over 80%. So it's a good deal, even if you don't get the extra 15, 20%.
It's a great solution to much better health care at a much lower cost. Yeah, please.
But do you want Congress to extend these ACA subsidies?
Well, I'd like not to be able to do it. I'd like to get right into this, and I'd ask Oz this question in particular, but I'd like to see us get right into this. I don't know why we have to extend. This could be done rapidly if the Democrats would come along. We have a problem. The insurance companies own the Democrat Party. They own it. And the Democrats having a hard time. They give a lot of money to the Democrats, very little money to Republicans. But
okay, and that did it right there. And I would actually be honest because there's obviously politics behind this. In my opinion, I think it's going to get extended because you need to have some sort of bipartisan act in order to bring that debt ceiling higher, which is going to come to vote again as far as a potential government shutdown next month. And they did agree to extend that shutdown. Until next month, but they also agreed to vote on the ACA Subsidiaries expiration, which is actually expiring this year, into next year. And if we don't get that extension, right, if they don't come to some sort of bipartisan agreement, OSCR's going to go down. Okay, like I'm sorry, that just, I hate to say it, guys. I'm not an Oscar bear, but if they don't come to an agreement, the market's going to look at Oscar and it's going to be like, we don't think this company is going to make it. Now, I will tell you, from my opinion, I think Oscar is going to be just fine, right, with or without it. And in fact, I think this is going to be extended because you're talking about a lot of votes, right? What President Trump is basically saying is that the healthcare companies or the insurers own the Democrats, right? This is straight from his mouth, right? I have no say in it, whatever. The market believes him when it comes to this, right? And they're going to have that vote. And if Trump is arguing about the ACA subsidiaries, and the Democrats are arguing the other direction, the market just sees it as in, we're not going to get an extension here. Therefore, let's sell off all the ACA subsidiary stocks. Therefore, let's buy puts on Oscar and just drop the thing, right? That's just essentially what's happening with the market right now. Do I have a position in Oscar right now? No, I do not. I got stopped out of my position. I did buy. We saw some positive news about a few weeks ago on Oscar, and I bought it at like 1460, and I kept raising my stops because it was mostly in shares, and I got myself stopped at like around $17. And, it was mostly a trade, take profits on. And I thought it was going to go up higher, but it just certainly didn't. The chart broke down. That just did not look good to me. Oscar is not a core position for me. It was something more of a trade. And someone else asked, are you guy buying anything today? Someone else asked, am I buying anything? I'm not buying anything today. In fact, I hedged a little bit today. I added QQQ puts for next month, and a very small percentage of the portfolio. Again, like whenever I do like these trades, guys, with like hedges especially, I don't do it in size. I do it very small, like less than 2% portfolio. And if you think about it, if the market goes down, which we're seeing some volatility in the stock market right now, then these puts might possibly print. And if they don't, then, well, guess what? The portfolio is going to be up a lot more than 2%. And I won't need to worry about that. So it is just a little bit of hedge that I like to implore into my portfolio because I'm very tech heavy in the portfolio. And that's the reason why I did it. Other than that, I got to be honest, and let me go ahead and share the chart for the Qs here today. I mean, we're picking up a little bit here, but as I was saying with the simple day with the daily moving averages and stuff, if we recover the bullish trend, so that means we need to move up about 1% higher on the Qs in order to recover that trend. If we do and we close above it, like a very good close, then I'll probably close those puts out and just wait to hedge later on, right? But like, there's really no reason to hedge if you're like all the way up here. Like, there's just no reason to hedge because I'm not trying to call tops or anything. It's mostly of just hedging the downside in portfolio to monetize off of it and then sell those puts when the market drops further. So then that way I could deploy the money and buy stocks, basically, right? It's a hedge. Hedges are not made to get rich off of, right? That would be directional trading, and that would be something that people would do if like they were like really focused on like trying to like make a lot of money. But hold on. Shorting stocks is like penny slots for Sam. Just trying to say, yeah, I mean, it kind of is, right? But if you look at really good money managers out there, they buy puts all the time. In fact, Stan Druckenmiller did it. I'm certainly no Stan Druckenmiller, but they buy puts all the time to hedge a portfolio, right? A lot of fund managers do, and they don't buy it like with the whole portfolio, like Michael Burry. They only buy it with a percentage of it because that's considered hedging. You're hedging the downside in the portfolio to reduce your beta and also to reduce the downside because the goal is to make money over time, not with directional trading. You're trying to make money in like one day, right? Because that timeline is just a bit too short. So yeah, I mean, that's really what it comes down to. I don't want to get too deep into it because I'm not trying to provide financial advice. This is just what I'm doing. In the long term, some things that I own in the stock market are still doing pretty good today. I mean, I do own Zeta. Pretty decent size portfolio is invested in Zeta. And I built my position around here in the sub 17s. Got a little worrisome for a minute, but I think we're pretty far above the 200-day moving average when it comes to these stocks. Like if we're above the 200-day moving average with some of these stocks, like I like to hold on to it. Plus the fundamentals of Zeta are really good. The only thing is that if we have a recession, people are going to cut marketing budget, and it's very likely Zeta is going to take a hit from that. But the company beats 16 out of 17 of every single quarter, and they always raise guidance. And also the future prospects of the company are actually really good. If you guys give me a shout out, I'll do a deep dive on Zeta. But there's a lot of useful content on there as well. So I don't want to like take up a whole episode today to talk about Zeta. But if you guys want me to start talking about stuff, just go ahead and do a shout out or message me on Twitter or like comment or something below to talk about something. If, it might seem like a good idea to do something if people are wondering what happened. Like Zeta had their earnings just a few weeks ago. And then shortly after that, they raised their guidance off of the Marigold acquisition and the stock was up like 8%. The stock was almost $20. But I would say, considering how the market's been acting lately, I would say that Zeta is going from 20 to 18 in a matter of a few weeks. So that's down like 10%. And the whole market, a lot of these stocks are down significantly higher. I would say this is pretty good relative performance for Zeta in comparison to a lot of stocks in the stock market. Bitcoin, though, is not doing well at all. BMNR is below the 200-day moving average. I am not buying BMNR right now. BMNR is a momentum trade for me. The long-term holding for Bitcoin or for crypto is the hard asset, right? I will always pick the hard asset over a proxy investment for crypto. And the reason why is because there's too many things involved when you're investing in BMNR, right? Like I don't argue with anyone that wants to invest in something like this. Like that's totally fine to invest in DATs because there is a fundamental thesis for BMNR to own 5% of the entire supply. And I do believe that Ethereum will likely be one of the most important coins and blockchains in the entire world. And that's what Tom Lee's trying to front run. Just today, the market's not really bullish on it. But I know at some point, crypto is going to be higher than where it is today, right? I'm bullish crypto long term. I own probably, I think around 2 to 3% of my portfolio is in just a bunch of coins. Like I own some Bitcoin, Ethereum, Solana, Chainlink, XRP. I believe that's pretty much it, and I've been invested in Bitcoin since like 2017. So, could Bitcoin get cut in half from here? Maybe, but like, would I really be worried? No, because my cost basis on Bitcoin is like less than $10,000. So it's not really a big deal. I think it's like around $10,000 because I was buying in like 2020 and like 2022 and 23. So yeah, I mean, we'll see with that one, guys. But, again, I mean, even though the market is like teetering up and down right now, this is actually pretty bullish for the mega caps because the mega caps are looking a lot better than they did yesterday. Apple is above the 20-day and the 50-day, sorry, the 200-day and the 50-day, but it's below that. But it was trading below the 200-day. I have to change the color of these things. This is the exponential moving average. So let me change the color of this right now so I don't confuse the hell out of myself. I'm going to go for, let me go for hot red for hot matte Farley. And let me change my SMAs to thick bands. 10 bands, 100 bands. All right, let me change this in real time for you guys. This is like pure technical analysis for you guys in real time. All right, there we go. So I don't confuse myself. Save this sucker. Save it. You know, I actually do a lot of coding with this stuff. So I'm doing it through this chart right now, but you could actually go into Pine Editor on TradingView. You can go to the source code here and then start changing some of this stuff. And I do a little bit of that. Like I changed the, this used to look at the 8 exponential moving average. I want to change to the 9, like the 9, the 21, the 50. I'm going to work around with this a little bit, and I'll provide that script to you guys if you guys want to check it out. If you guys want to check it out on your TradingView, if you have TradingView. But yeah, I mean the med caps look better. It's just like if I were to buy med cap today, it'd be Amazon. But Amazon is a big part of my portfolio, and I don't want to add to it. Like I feel like it's already a big part of my portfolio. There's no reason to add to it. Like I think there's much better upside with certain companies other than Amazon, but I will never sell Amazon. Like it's just the greatest company in the entire world. I don't want to get too much into that one. I've said it many times in Amit's podcast and stuff, so I don't want to get into it, but Amazon's a great company if you're looking more for a long-term stuff. Google, it's been on a massive run lately. This is like something where like people were pounding the table on down here in the 150s. And unfortunately I was not pounding the table on, but it's all good. You can't really get everything. I think for the long term, you know, I think Google is going to end up being the greatest LLM platform out there. I don't think it's going to be OpenAI, even though they're ahead right now, but I do think that Google is going to catch up. Like I'm a big fan of Sundar Pichai. And I should have saw that in the stock price before. But again, guys, you can't catch everything. I think Meta is actually a pretty decent buy right now, especially since we're kind of coming back over here above the 200-day moving average. We've come back above that 200-day moving average. It's going to be very, very bullish for Meta, very bullish. Microsoft, this thing made a massive move, especially back since 2018. So Microsoft in 2018, Satya Nadella actually came on board around like 2015, 16. I forget the exact year, but he switched the sales model for Microsoft Office and all that stuff into a subscription model versus like buying a license. You know how like you guys used to go to the store and buy Microsoft Office for like $115 or something, and then you'd have it for the rest of your life. Satya Nadella changed that to a subscription basis. So at first it wasn't that high, but now it's like you're spending more on an annual basis for Microsoft Office than you would if you bought it one time. And like no one needs the latest and greatest Microsoft Office, right? But he's forcing people to do it, and people are doing it. But not just people, enterprises are doing it. Enterprises are buying a seat for every single people in the organization, and it is a staple in enterprises. So is this going to go higher? Very likely, but I think like the upside in this thing is just like, I think there's better opportunity in my opinion. I think there's better opportunity. Netflix, I don't know. It's hitting here at the 20s simple moving average or daily moving average. Let me actually hide the EMA. Monthly moving average. I don't know. The chart was super bullish. And now it's breaking below here. They are not a fan of the Warner Brothers merger. They do not want them to buy Warner Brothers. They do not. I mean, is it good for them? I don't know. Everyone buys Netflix. Everyone has Netflix. But like, is it good for the long run? I think if you're going to get into streaming, guys, I think the real streaming platform is going to be Google with YouTube and with everything that they own. And I think they're just going to keep getting bigger in streaming, right? You have people basically switching from linear TV, which is just cable, all the way into streaming, and that industry is going to keep growing. And I think that Google has a lot of upside there, a lot of upside. Tesla, is there ever a good time to buy Tesla other than when everyone hates it? Like, I feel like you buy Tesla when no one wants Tesla, right? When you see like the OGs sell Tesla, that's when you buy Tesla. You don't buy Tesla when people are shooting fireworks and proud of like owning Tesla. That's when you don't buy Tesla. That's when I don't buy Tesla. I buy Tesla when no one wants Tesla. And it is completely detached from its fundamentals. Like anyone who says the word price to earnings or PE ratio at Tesla, Get out of here. Like, when was the last time Tesla was attached to its financials? Never. The company is decreasing revenue every single year and trading at all-time highs. How do you use that as a bear case? Like, it makes it, it's like looking at Palantir, right? Like, don't give me price to sales ratio with Palantir. Everyone knows this thing is overvalued, but it keeps going up, right? It keeps going up. So don't use that as your thesis. The stock is too high, so we're going to short it. It's like, get out of here. Like, that hasn't worked for the last year or 2 years. It's probably not going to work today. And I have always argued that if Palantir goes down, the market is likely going to go down. And when Palantir was down here near the 200-day moving average on Friday, November 25, guess where the market was? The market was at the 100-day moving average on the next day. Right. So it's like, come on, guys. Like, not you guys, not you. Obviously, you guys are the best. You guys are awesome. I'm talking about the people who are trying to short this crazy stuff out there, right? In size. It's like, we're not talking about hedging. Hedging is different from, it is still technically shorting, but hedging is to counteract the downward move or possible downward move in your portfolio that is very heavily weighted toward one sector. In this case, might be tech. So if someone had like 1 million shares of Palantir and bought some puts to hedge their Palantir position for the short term, that doesn't mean that they are shorting Palantir. Well, technically they are, but that doesn't mean they hate Palantir. It just means that they want to reduce some of the downside if it goes down, right? But like, when you got people like Michael Burry out there buying heavy puts on Palantir and Nvidia, well, that guy is definitely, and it's just, why would you short Palantir out of all the stocks out there? I don't know. No one wants to sell their Palantir. Institutions don't want to sell the Palantir. So why would you short Palantir? I don't know. We'll see. Anyways, I digress. How's the market looking like right now? I mean, it looks like it's pretty decent. No, I take it back. It doesn't look pretty decent. I mean, we'll see how that happens tomorrow. I mean, we had a major reversal today. So this was like a massive selling event for the last couple of weeks. It is nice to like not have that continued selling today and to not see red in the portfolio for at least one day, please. But it is nice to not see that. And we don't have any red in the portfolio. Thank goodness. Also, the SPY looks pretty good today. I want to see this close just a tad bit higher today. That'll look really good. For the EMAs, yeah, I want to see it close. I mean, we don't need to do this. We don't need to do this today, but as long as like we don't do this, then like, it won't be like so crazy. So we will see what happens with that, man. Oh my goodness. I don't know. It's not just the simple day moving averages on the SP 500. It's also this, like, I don't know. Like, if we were still in a short term, because I've seen crypto do this before, right? Crypto did this down over here. Remember this? You guys remember this major bull flag? We could be setting up for it again in a much longer time scale, but this bull flag was better than this one. But, it's just sometimes I'm like, crypto's kind of telling you that the market's a little bit risk off right now. It's a little bit risk off right now. It's what the crypto is telling you. The moving averages are proving it. So, we'll see. We'll see what happens with that. Just know what you own, guys. Know what you own. Make sure what you own is what you want to hold on to. If we do have further downside, I mean, I know Matt Farley and a lot of you guys are doing really good today. The Rocket Lab up 11% today. Did they have news? Did Rocket Lab have news today? The Golden Dome is going to law today. 20 launches so far. Oh yeah, they had a recent launch, but like, why would it go up because of that? Trump signs executive order ensuring American space superiority. Okay, so space stocks are probably up, aren't they? Where's my good boy ASTS at? Yeah, it's up 7%. Market likes ASTS right now. It likes Rocket Lab. Where's Sats at? Sats is up 2%. Dude, that thing is like near and off. That's not a good barometer on space stocks right now. What else is there? Redwire. Is it Redwire? RDWR. RDW. Oh my goodness. Yeah, that's up 10%. I wouldn't buy Redwire. I'd buy Rocket Lab. I'd buy Rocket Lab. I wouldn't buy Redwire. I mean, Rocket Lab is the only derivative you can have investing in a logistics system for space without investing in SpaceX, which a lot of people can't. Unless you buy Google, technically you own some of SpaceX. If you own Google, Google owns, I think, 8-10% of SpaceX. So technically own some SpaceX there. But Rocket Lab is the only form of investment in space logistics besides SpaceX. I mean, I don't think Rocket Lab's going to $1.5 trillion today, right? But if SpaceX is going to be a $1.5 trillion IPO, wouldn't Rocket Lab kind of make sense? I don't know. Rivian Meister, Rivian. Oh, wow. 14% today. You know, that must be the reason why my boy On Semiconductor is doing really good today. I think this stock has a lot of room to go. So if I were to buy a stock today, I would probably buy On Semiconductor, but I already have a lot of On Semiconductor with calls, so I'm not going to be buying that anymore. The time to buy that was down here. I could probably still buy it today, but I already own a lot of it, so I'm not going. Energy Play, ENS for battery storage. This one's a pretty good one for Energy Play. Thoughts on the Nebius price action? You know, this is one of those things that I mentioned earlier. So, like I mentioned earlier, the Blue Owl pullback on Oracle is just not painting a good picture for debt with a lot of these companies. And there really is nothing to say with this one. Like the chart just looks terrible. You know, I mean, for me, like I already own Nebius. My cost base is below $30, like around the 25s. So like I added a little bit up there at $100. I don't know. Maybe got a little excited about it because Amit was buying, everyone's buying. It's like, oh, let me buy this. Is a great price. You know, it's like, okay, fine. But whatever. It was like a small size added to it. But like, I'm not buying here. You know, it kind of doesn't make sense. If you liked it at $110, you will definitely, like I said, no, that's not how it works. That's not how it works, right? It's not for me, at least. Not how it works. Like if you liked it at $110, you should love it at 75. No, that's not how it works. We're in a much different market. we're in a much different sentiment up here than we are down here, right? So, but I already have a decent size in Nebius, and that is super volatile for the portfolio, like super volatile for my taste. Now, speaking of volatility, speaking of getting shammed, man, I got shammed on this one. I could have sold that. You could have sold at $70. You could have sold it, but I didn't. I didn't sell at 71, and I'm back holding it at $35. So that be it. It is 12:38 right now. Yeah, girl. Dude, you guys have been buying Rocket Lab hand over fist. And I mean, you know, shout out to the yacht. Shout out to the Rocket Lab yacht, because that thing is gonna turn into a spaceship. It's gonna turn into a proton rocket in 5 years. That yacht will be a proton rocket. Is the market going up right now? Yeah, it is. I don't know. I don't know what to make of this market now. This is just nauseating to look at this point sometimes. Sometimes it's a little nauseating to look at. All right, what do we got going on in the chat? Oh, yeah, I appreciate you guys signing the executive order, which is very good for a lot of space stocks out there. Yep. Nike reports after hours along with FedEx, KB Homes, BlackBerry. BlackBerry. This thing is coming back from the dead, isn't it? All right, maybe not. I mean, it did come back from the dead. I would never own BlackBerry. Like I don't see how this is. I don't see the play. Are you going with momentum here? I mean, the chart doesn't look that bad for a trade, but no, I'm not going to do it. I don't know anything about this company today versus where it was 2 decades ago. Like, I don't know. In fact, my father-in-law, he still had his old BlackBerry, like a 10-year-old BlackBerry. Just finally, I've been telling the guy, like, look, man, get an iPhone. And he would not do it until I literally got him an iPhone. Actually, no, my brother-in-law got the iPhone, but I had to set that up. I had to like literally have like an Apple workshop with him just to teach him how to use it. And like he finally knows how to use it, but it's an iPhone 10, right? It's like, I want to get it, but at least his original transition was to the iPhone 7. And now he's on the iPhone 10. So he had like a slight upgrade there, right? Does he? Oh, yeah. One sec. Okay. I just confirmed with the wife. We just know he has an old iPhone. I mean, you know, the Blackberries just are. I don't know what the bull case is anymore. Blackberries, I really don't. Maybe it's just a good chart. Maybe it's a good chart. All right, guys, we got 80 of you. We had 69 people on my channel. All 69 people of you, all 69. Go to the Wolf_Financial YouTube page. Subscribe there because I will be on there. Only on there starting in January. January 2 is that the first trading day? When is first trading day 2026? Okay, I will be in there. And no, that's a Friday. I don't know if I'm gonna be there, girl. I don't do Fridays. Samsolid doesn't do Fridays. Probably Monday. So 2, 3, 5th, January 5th. I'll be on the YouTube channel. All 69 of you people, not 67, all 69 of you people, go ahead and subscribe there. I'm gonna be there. Grab, dude. What I don't understand what's happening to Grab. Like I don't know. I still own Grab. I'm not adding to it. I still own it. I don't know. Like I don't know. I'm a sense too. Like, why does the market hate Grab right now? Like I just is there something I'm not seeing here? Like they're buying back. Yeah, they're buying back 1/3 of their market cap, right? They're profitable. They're going to head more toward profitability. They're in Southeast Asia. The dominating delivery app and all that stuff in Southeast Asia. Actually, no, maybe not delivery, but for ride sharing, they're dominating in there. They're in the biggest markets out there, right? The biggest, fastest growing market in Southeast Asia, which is specifically Indonesia. GoTo is just going to go bankrupt, right, at this point, or I feel like they're going to go bankrupt because I don't think they can sustain themselves. And if they don't go bankrupt, Grab is going to dominate them. So does Grab need to buy GoTo? Probably not. I don't think the market wants them to buy GoTo, but I don't think they have to. But if they do, it's not fun. It's not bad. It's not bad. Yeah, no, you're right. Grab is not a U.S. company. They're listed on the NASDAQ, but they're not a U.S. company. So, you know, that could have potential weakness. But they're like U.S. companies will always have a premium. Someone asked about it earlier. I don't know. I don't want to look for the chat, but someone asked about Uber. Well, this doesn't make sense to me either. I think there's like underlying fear around robotaxi and all that stuff. I don't understand this either because Uber is a really good company and they're partnered with Avride, which is a Nebia subsidiary. They're also partnered with a lot of companies and like they're not building a robotaxi. They're just facilitating the ride sharing access to it, right? And they're all over the world, right? It's like, oh, well, why sell Uber? I don't know. This might be an interesting play to look at, but I do want to see some upward momentum in this, like for that thing to recover. I don't know. You know, Uber it was never really a company I want to invest in for the long term. So I don't know yet. Anyways, guys, appreciate you all being here. We're here at the top of the hour, about 12:45. I'm probably going to take it easy for a little bit. I want to see how the rest of the price action go on for the market to close. Is Stocks on Spaces going on right now? Yeah, Stocks on Spaces is going on right now. So go ahead and check out the Stocks on Spaces. I'm going to head over there. There's a lot of cool people that are on there too as well. But yeah, you know, and I don't know. I don't know what to make of this market. It'll be interesting to see where it closes. I bet you they're going to close this thing like right on the 20-day. that would be wild if they close it right on the 20-day. Like, what? It's like, way to put everyone on the edge of their seat. Anyways, guys, I'll see you later on. Again, if you haven't checked it out, you're on YouTube, you're on my channel, you're on X, go ahead and check out the Wolf Financial, Wolf_Financial on YouTube. Go ahead and check it out. Like and subscribe there. Go ahead and comment while you're at it. Help the algo. Help all of our friends and all of us at the Wolf team